Hello guys, welcome to another valuable video. It's Gabriel and today or in this video we'll be talking about the boom and crash. So if you trade boom and crash, come closer. So guys, so many of us or many of those people who trade boom and crash, for those of you who have interacted with me, I understand that you are doing a lot of indicators, but you have to stop because like when we talk about indicators, they kind of hold you back. I don't know whatever confirmation you use with them, but you have to focus on your strategy and you have to focus more on understanding your strategy and how to use it in whatever market you want to trade. So in this video, I'll be showing you guys how effective the Falcon strategy is on boom and crash market and how you should do it step by step. So without wasting much of our time, thanks for your support. Please don't forget to like the video if you enjoy it. Don't forget to say your comment in the comment section. Subscribe to our channel if you are new. Let's get started. So guys, before we really get started, sorry for the delay. Going back into price, so you don't see that or you don't take it as if this is just something that just worked once and then I'm bringing it to you guys because it works once, right? So if you look at the chart here, this is a different index, right? This is a different boom and crash. This is a boom index. You can see how effective price patterns are on this particular chart. Also, if you look at the crash, and you can see that price patterns are actually effective on this. Not that I just tried it once and then it worked out. Also, if you have been following our YouTube channel for a long time now, you can remember that sometime last year or last 2 years, I dropped a particular Falcon Fx strategy on boom and crash, right? So guys, this is kind of like an updated version, and for real this time, let's get started.
We'll be using Boom 300 index for our illustration. So as you can see on my screen, that is the trade, right? And it is currently running. As you can see there, it's currently running and almost, I think halfway toward the final twist profit. So guys, simply the simple thing you do is always the same thing when you trade a particular strategy. When you trade the Falcon strategy, what you do is the same stuff. Okay, just train your eyes or train yourself to always hop on the chart to identify what the last significant impulse and then the consecutive what swing
It's 10 o'clock.
after it. At least the two swing highs and the last two swing lows. The last two swing highs and the last two swing lows. Just train your eyes, practice more and more to be able to identify this particular stuff. Once you're able to identify these things on the chart, you are done because embedded in this, but the idea or the concept of identifying the impulse and then the two significant swing highs and swing lows is the market trend. So the market trend is embedded into it. So the moment you understand how to identify these things, you'll be able to identify the market trend. Let me just say subconsciously, even without you saying to yourself that you will see downtrends, just know the psychology behind the particular pattern that you have identified. All right. So hopping on a chart this noon. It was in the morning, it was noon, right? So let's just forget about the whole story, right? You can see here that we have what? A significant impulse here. These are a significant impulse, right? Because we can see that it ran down. These are significant impulse. You can see that it ran down directly, like straight downwards. We have only this pullback here, and it's not really giving us a particular swing kind of vibe. It's just giving us impulsive vibe to the downside, right? Now, mind you, if you want to zoom out, let's say the swing you choose to look at, the particular sorry impulse you choose to look at depends on you actually, because all of them work out. Everything works. If I let's say if I decide to zoom out like this and I want to identify a particular impulse, this is a significant impulse. If I zoom out like this, and then the whole price structure will be something like so. The whole price structure will be something like so, something like that. So whether you zoom in or you zoom out, it all depends on you. All right. But for me, I don't like to zoom out a lot because I don't like to hold trade for too much. I don't have that time to hold trade a lot longer than I can hold. So I like to always focus on the current one as open and as visible as I can see it. All right. So the impulse is this guy, right, to the downside significantly. And then after that impulse, the impulse like so, then after that impulse, we can see what price started giving us what swings and swings and swings, and then this swing when we made price. All right, this was the swing, or this is still the last swing point right now because this is where my market is currently, right? So for those of us who understand patterns already, we have to connect what the swing point, and connecting the swing point, make sure you connect the top of the wick. Do not draw your trend line or do not connect bodies like so. Do not do this. And also, if you are drawing your trend line and then one is kind of fall out, try to make sure that you evolve it to go back into the to put your trend line on top of it. All right. At the impulse, we have this structure right here, 1 2, the third touch right there, and then we have what 1 2 and then 3, 1 2 here. That is what we had this noon. You can see we executed the trade. So this was the structure earlier. So after identifying the direction here, right? I know that the lowest level is where at 90, so this is 90%, right? This is going to form angle 90 for us, right? And then the highest level is where the last swing point that price was uh, dropped from. So from there, what I do, this particular system, I trade it the 1 hour time frame, then the 5 minutes. Those are the two time frames. You just 1 hour and then the 5 minutes. So the 5 minutes where I get to execute the trade. This particular trade I executed with the price pattern, so we're going to that as well. So after the 1 hour time frame, what I did is just to go directly to the 5 minutes. So the 5 minutes is I'm going to keep looking for the current side. Each time frame to make sure that you focus on the current side of it, the current side of that particular pattern. Then you apply what pattern separation. If you don't really understand pattern separation, I think sometime last year I made a video about pattern separation. So please look in our videos to understand that. And if you want me to make another video of that, please don't forget to say in the comment section. So this is the 5 minutes, right? And on the 5 minutes, you can see that, like I said in the last video, when you put together price pattern, right? Series of price pattern forms a price channel. Series of price patterns forms a price channel. So the first price pattern that happened after the after price, or how price came to the third touch, was with this particular price pattern 1 2 3, right? 1 2 and 3. So this is kind of like a running channel. We know that what it's a signal for what reversal. So we had that, and price rejected here. You can see a good rejection candle here. Price rejected here. Price also took what liquidity from here. For those of you who understand liquidity graphs, right? You can see that price took liquidity from this previous high. So price took liquidity for those who trade support and resistance, right? So price took liquidity here, right? Then we had a significant drop breaking through this particular pattern here. So we broke through our trend line and then created what another price pattern right here. So this is 1 and 2, connecting this. Then this is 1 and 2, connecting this. So what we have is what we have an impulse correction, an impulse. We have what a running phase, which is a channel phase here. Then we have what another pattern that after this impulse we had another pattern here. Most let's say funny and not really common pattern, which is this guy kind of like pattern after a pattern, not like pattern after an impulse, just a pattern after a pattern. So we have it like so 1 2. I'm pretty sure it's not really let's say it's not a common pattern that you guys see, but if you look at all of those pattern books and all of on those those theory stuff, you're going to find it on them or in them. So you have this guy. So first thing what you want to do when you hop on this time frame, you have to, or the medium time frame or the entry time frame actually, you have to separate the patterns, separate them in patterns. Then you get to see what channel it is forming. Then from the channel, you get to see more pattern within. So we have all of this. We have this guy, and this guy. What I did was to what understand that it is all forming a channel towards the downside. So this is what I later did is to connect this guy to this one, because this is one swing, right? They're all touching. There is one swing, and then after that, it's just to extend this guy. So I saw that we have what a bigger impulse here, and then we have all of these to be what a particular price channel. So I met price a little bit late. So where I executed price was what after this particular the rejection from the whole channel. So the rejection from the whole channel gave us this. After this impulse, we have this word channel to the downside 1 2. So the execution was right there, as you can see on the screen. And then for the target, I went back to the higher time frame, because we saw that price has what impulse, the third touch, and it's always the most impactful touch. So we know that price should what probably break to our 90%, and then you can see that price significantly broke, and we are currently rocking price. So you can see that boom is actually crashing. So guys, for the target, we come back to the 1 hour. You can see that what we all remember from price pattern, right? When we have this impulse like so to the downside, we have what a corrective phase, and then what the next thing is what impulse again. So after the what after third touch, which is the most impactful touch, we should be looking for more downside. So because of that, this is our 1, 2, and the third touch here. So we are looking for more downside, at least to the 90 and probably further. Because I remember that time or back in the days, we used to, drag the whole line from like so to the base, and then we take it from the same top to what like that. So we used to take profit right here, but now I'm not gonna do that. I'm gonna take profit in the 90%. So guys, make sure you practice very well. Make sure you understand the concept before implementing. Make sure you trade on a demo before taking to your live account because bro, the market is objective. Doesn't care if you need money, if you don't have money, if you have too much to lose, if you don't have enough to trade. Just make sure you apply risk management. Make sure you practice these things. Make sure you also ask your questions in the comment section if you have problem. And thanks for watching. Stay highest.